Hello everyone, Team Exponential is excited to continue to bring unique opportunities in the Carolinas with above average returns for our investors, potential newer ones and existing ones. So I'm here to discuss about Aurora Meadows Townhomes, a 29 townhome built to sell opportunity very close to downtown Charlotte, and I'm excited to talk details about the deal. So first, financial and business disclaimer. The business plan obviously contains several forward-looking projections. So every one of you who is looking to invest, whether it's in this opportunity or anyone else or any other opportunity, please make sure you perform your due diligence, allow you to understand what the risk is and what the rewards and projections could look like from your own due diligence perspective. Also, this is not an offer for securities. This would be something that we are providing education on to ensure that you understand what it looks like, and you can go into our portal and register yourself for further documentation and understand in detail what the opportunity looks like that you can choose to do. So let's talk about this. 29 townhomes. Aurora Meadows is the name of the townhomes, previously known as Hullabird Townhomes. It's 29 luxury townhomes, 8 buildings. Each townhome has 3 floors, 3 bedrooms, 3.5 bathrooms. The opportunity to make a 4th bedroom with a bonus room or a home office, and a 2-car tandem garage. So 2-car garage. So it's a pretty huge facility. It even has an exciting rooftop terrace that one can use for entertainment space, etc. The beauty about this project and why we love this project and why we took upon the construction of this is it's less than 5 miles from uptown Charlotte. For those who know, downtown Charlotte is called uptown Charlotte here. Strategic location on a cul-de-sac in front of Southview Recreation Center, and we'll go through that. But basically on this road, it's a dead-end road. So there's not much that would come up. Frankly, no new construction can come up here. And the Southview Recreation Center is free to use for track and field, for baseball game, etc., for anyone looking to live in this space. Also, Three Sisters Market is coming up. There's just a bunch of activity as I go through the details coming up in this Path of Progress West Boulevard corridor with several upcoming developments. And the construction timeline is about 14 to 16 months, now 13 months, with a return of 18 to 22%. Could be up to 24% for our Class B investors, and I'll explain why only Class B as we go through the details. So I talked about some of this area. It's highly desirable area. It's in the Path of Progress. So once you look at downtown Charlotte and come down south, areas like South End, LoSo or Lower South End, that there are completely developed townhomes are available for $1 million and above over there. And this is a couple of miles down south off that. So it's the next upcoming development opportunity. Lots and lots of development going on, from multifamily, office buildings. A new police station just came up. Several townhome developments coming in. So we're right in the middle of this wonderful, wonderful place that is over the next couple of years getting completely changed. These townhomes are on an average 2161 square feet. Plus 2-car garage and attic space, so the heated square feet is 2161. We are actually in the construction phase right now, and with the delivery expected starting from Q3 2023 and ending in Q2 2024. The total project is about $14.7 million with an equity raise of $5.1 million. We're expecting a debt of $9.6 million. It's a recourse loan with a local bank. Projected sale amount at 18.5 at the price per unit of $640, and that yields a net profit of about $3.1 million. So for our Class B investors, that would mean that 18 to 22 or up to 24% return. with those projections in a very high velocity time, and I'll explain why. Project timeline. So we bought this land back in 2021, and that's where we had Class A investors coming with us. So they invested back in 2021. We raised $2.3 million during that timeline. Then we had to go through the arduous process of permitting and getting through Mecklenburg County, which is the city of Charlotte's permitting process, which really is a long time to deal with. Once we are done with that, we actually began horizontal construction, so clearing the land, grading the land, first week of January of this year, and we are expecting to put foundations and pads in mid-March, and groundbreaking is scheduled for 18th of March, along with vertical construction beginning shortly after that. So this project, for people who are now investing versus people who invested back in 2021, the people who are investing now have the ability to have lower risk. Essentially all the permitting risk is completely gone, and they are in a fast-paced construction project which is expected to start. The first building is coming up in September of this year, with one building a month expected, so 8 buildings. So by April of next year we'll be done completely with the construction and completely with the sale is our projection. But we're putting some more months for the sale piece to ensure that we have a little bit of buffer to complete the sale process if we need to. Our team, so development team of myself, Yomesh, and Brandon. Brandon leads our new development arm of the division of the company, and brings about tremendous experience in the residential development space. We have 85 million in construction going on within the Charlotte MSA corridor, this being one of 4 projects that are currently happening in parallel. So we're excited about that, and that allows us to bring great quality of supply chain, understand the issues and navigate those and the challenges that come with the construction project, and also have strategic partnerships with architects and GCs and civil engineers and our broker, which we'll talk about. So our track record, we have, like I mentioned, 85 million in ground up going on. We have close to 1,000 units in the multifamily space. We have 600 acres of land that we have different stages of development. All in all, a little over 150 million asset portfolio that we developed and managed, mostly within the Carolinas. And that we have a team of 13 people within the company. So excited to bring that level of vertical integration and expertise across multiple divisions of the company that work in tandem. Fairwood Construction is our general contractor. They have done tremendous amount of work across the Carolinas of all kinds. The contract we have with them was known as a GMP, so the General Maximum Price Contract, which means that they can only charge a maximum price of X, which is the price that's written there in the contract. But if they come in below that price on any of the things, then any savings would be shared. 50% will go to them and 50% would go back to the project, which incentivizes them to come in below pricing for pretty much everything that they can, while the lender has a predictable upper floor of the price that they know that will be charged. So the lenders can provide us a good loan based on that upper price. So it's a win-win situation that we negotiated with Fairwood, to not just have a fixed price contract, but have a GMP type of contract. Studio Fusion, again, has done wonderful, carries 30 plus years of experience in this space. Ed Hickman and team have done a tremendous amount of work in terms of townhome development, so they are our architects. Similarly, McKim and Creed is a big firm here, and carries a lot of expertise in this space. Tiffany Johannes, she's the head of the president of the Charlotte Realtor Association, our broker in charge for Charlotte Home Experts, and really has built a comprehensive marketing plan. Our goal is to help pre-sell these units, right? So before they're constructed, start the sales process way before, months before, and to that end have interior renderings, third-party 3D modeling software, etc. Whatever is allowing, plus omni-channel marketing, a landing page, all the detailed marketing plans that are typically put in place to sell a community like this before it's constructed. And once the first building is constructed, we'll have a model unit that people can walk into, but in theory we'll be able to give out keys as soon as the units are constructed and line things up beforehand from potential buyers with the lending process all completed, and that would allow us to have a very high velocity of sale for the product. And that's why we have this short timeline for our investors of 18 months. So why Charlotte? Charlotte, North Carolina. Obviously, the biggest thing why you would want to think about Charlotte, if you haven't already thought about Charlotte, is Zillow's predictions for the hottest real estate markets of 2023. Number one is Charlotte, right? And 250 people move here on a daily basis, and they all need to live somewhere, especially the ones that are moving for those higher end jobs, the 35-year-olds that like to stay in that South End area that I'd mentioned before, but don't want to spend $1 million for a townhome product similar to this, but can go in a couple of miles down south and live here. That's the type of customers and consumers that we are catering to for this product. But Charlotte has, you can think about, everything. It's got a football team, a soccer league, great transportation, employers including Wells Fargo, Atrium, Walmart, Bank of America is headquartered here. And West Charlotte, which is where this facility is, the Hullabird Townhomes, or Aurora Meadows Townhomes is now it's called. It's kind of here. This is where the airport facility comes in, and this is where 4.5 miles away is where we have the downtown or uptown Charlotte facility. So this is again the Hullabird Townhomes or Aurora Meadows Townhomes facility here. This is the Southview Recreation Center that I was mentioning. So there's nothing here. There's a church here. There's a women's center here. There's nothing that can be built here from a construction standpoint. So our customers can have West Boulevard, where they can go to the airport in less than 15 minutes. They can go to downtown Charlotte in less than 10 minutes, or the South End area in less than 5 minutes, plus have this beautiful facility that they can use that is maintained by Mecklenburg County for free, and use that for jogging tracks, for sports, etc., gymnasium, fitness center, game room, all that is available with a level of privacy that you won't typically get in any other community because of this cul-de-sac dead end that is available here. So property summary, like I'd mentioned before, this will be built in 29 townhomes, 3 stories, 2161 square foot, and luxury design. Obviously these are not where we'll have ultra luxury appliances like a thermodor fridge or anything, but this will be chic, modern, contemporary design that with the lighting, with the appliances, etc., that allows us to sell it as a high-end product that we would like to. Location overview, I've kind of gone through this, but here are the stats on some of the things that are available next to it. And then this whole space is a couple of hundred units of multifamily coming up and down this corridor. There's just tremendous amount of construction going on with land development, office, multifamily, and townhome development that's coming up. And on this Billy Graham Parkway, there's a bunch of corporate parks as well. So a lot of people who work here and want to have a commuting location that is 3 to 5 minutes away from their house, this product would be super helpful to them, along with some of the things that are coming up here as well. So this area is in the verge of complete transformation, and we are excited to be in the middle of all of that. Renderings, as you can see, beautiful facility with that contemporary finish look that again caters to that 30 to 35-year-olds that are looking to stay in a high-end apartment or townhome like this. Side plan, there's multiple model units. Everything is pretty similarly sized. I'll kind of go through one of the floor plans to give you an idea. So this is the 2-car garage, a facility that we have. This is the bonus room or your home office, along with the bathroom that one can use for a bedroom or bonus room. Then you climb up the stairs to the second floor, and this would be the entire living and kitchen area that we'll be looking at. And then we'll climb one more. You'll have a couple of bedrooms and bathrooms available, and with one being Jack and Jill, and then the fourth floor would be the actual rooftop terrace and the attic type of area. So what does it look like from a comps perspective? This is 2161 square feet. Q2 of 2024 would be the sale completion. We're pricing them right now as an average of $640,000, which is coming at $295 a square foot. And as you can see, places around it are mainly because of the way that this area is in the verge of transformation, versus some of these places are in the gobsmack middle of transformation. You'll see that pricing is quite high in Charlotte, right? And average pricing for sales in Charlotte is pushing $215 to $220 per square foot anyways, even if it's a lower end pricing home. So this allows us to have a certain amount of buffer. If your average price of a townhome is around that $697 range and we're trying to sell it for $640, obviously we'll try and sell it for higher. We'll start batch by batch as part of the marketing strategy, test out one price, then once 3 or 4 townhomes sell at that price, start increasing the price by $20,000 to $25,000 and keep going till we hit a snag point, and that would be our ceiling. So we'll try and achieve as big a value as we can from a pricing perspective, but at the average $640 is what we have underwritten to. And you can see some of the comps in a visual manner. You can research on them if you like to see what they look like as well. But I wanted to go into the detailed cash flow models that allows you to understand where we are from a uses of capital standpoint. So we purchased the land at $950. It came fully approved and rezoned, and all the elements were completely done in terms of the surveys, etc. So we didn't have to do too much of a due diligence on the land itself. But then the horizontal construction based on the GMP contract that we have is at $1.25 million or lower. We've kept $100,000 in contingency, just straight up horizontal contingency, and then these numbers are all additional contingencies should we hit. We need to put tap fees. Some utilities allow for tap fees and incentivize us to put those. Some need charging extra. If we need to put in feeder circuits, if we need to put in some lightings and furnishings, we need to do that. If we need to test for unsuitable soils, which we don't need to anymore, we can do all of these with that $700,000-800,000 of contingency bucket that we have created, to allow us to ensure that construction projects have ample reserves, and allows us to deal with any challenges that could come up during this short construction process. Then we have the vertical construction is $10 million, and another $200,000 on top of that is our contingency bucket, with another $150,000 for appliances and signage, etc., that allows us to, if we need to change appliances or put something higher end, or the pricing changes, then we can use that bucket for some of those things. Then we have the soft costs, which are architectural engineering, entitlement, taxes and insurance, development fees that are 5%, and we'll kind of disclose that in the next page as a disclosure page, plus closing costs that puts it entirely at that $13.9 million. Construction capital, which is the interest on the loan that we will get. The loan that we're getting is a construction loan at 65% loan to cost with a 6% interest rate from a local bank. It's a recourse loan, so we're taking as the management team additional risk associated with this. We're not putting any sort of incentive for us for that risk. We're not charging any acquisition fees or anything. We believe in this project and this product and the area. But we also put some contingency in there. We have assumed here with that $675,000 that the construction, they could, if the loan lasts for entirety of 2 years and we have to make 2 years worth of payment, then that would be 675. The fact of the matter is, it's an equity first construction project, and what I mean by that is we have to spend the entirety of the equity that we have before we start drawing funds from the construction side. And when we start drawing funds from the construction side, and as soon as we start selling some of the units, the construction loan gets paid first. So this number should be drastically smaller given that's the model. But just in case we don't sell any single unit for 2 years and we have to pay an entire construction interest only loan, this is what we've calculated for that. Plus financing fee of $50,000 just to do the transaction cost. The legal team on their side would do a lot of due diligence, etc. And that brings that total to $14.7 million in terms of the project costs, including debt. So as you can imagine, we have about $1.2 million to $1.5 million in contingencies, including the capital construction interest that will allow us to play with. So if we can, plus the GMP contract that incentivizes our GCs to come below budget. So realistically we would be finishing this project way below this number that's defined here, and that creates an additional moat for us to sell either at more incentives or create a bigger spread for our investors and ourselves in terms of the profits. So I went through the sources and uses on how it looks like here, but that would mean 65% debt is about $9.5 million, another $5 million in equity. We're putting a development price per unit at $507, about $195 per unit, and then we're selling it at $296 per unit. The gross proceeds that I mentioned were $18.5 million. The sale cost includes the broker fees and a disposition fee of 2%. So 2% is what we have assumed for broker fees, 2% for disposition fees, and that would be the $742,000. So the net proceeds from sales are $17.8 million, and that yields that $3.1 million in profit for our investors. So as a management team, we'll be looking to the development fees being charged as a one-time fee, and this is for our director of construction management, our employees, to work with the GCs through the construction process. As you can imagine, construction is a much more interactive and time-consuming process than an acquisitions and asset management of an existing asset, whereby you have a property management company. So this allows us to pay the salaries for our employees and director of construction management, and then a disposition fee is a one-time fee that's being paid to the sponsors at disposition to bring about the highest value with our broker team and our marketing strategies, etc. Those are the only two fees we're charging. We're not charging any acquisition fee, any loan guarantee fee, or none of that. That is typical for a recourse construction project. So what does it mean for Class A investors? So that was the $2.3 million raised in the past. We've already done the raise. They get, because their money is in play for a longer duration of time than Class B investors, they would get a slightly higher return at the 70-30 split. So they're expected to get between 22 and 28% return. And then our Class B investors, which is the tranche that is open now, we are raising that $2.8 million that is left at, and we will be providing a 60-40 split. So 60% goes to our Class B investors, 40% goes to the management team, and their money would be a high velocity play, so 18 to 24%, with a 1.3 to 1.3x equity multiple. So you're looking to earn about, $100,000 in 18 months could yield 30,000 extra, so 130,000 in total is the simplest way to think about this math. And that's great for investors who are looking to say, hey, if I have money in treasuries market at 3 to 5% right now, that allows me that liquidity. If I put in money in an existing multifamily project, I'm locked in for 3 to 5 years, versus this provides me a similar, if not better, return to a multifamily investment with an 18 to 22% projection. Plus, I get my money back in the next year, and then we'll figure out whether that's something that, where the economy is and what the Fed's interest rate looks like and what the Ukraine war looks like, allows investors to make smarter deployment decisions faster rather than being locked in an illiquid asset such as multifamily. So it's a great diversification strategy for someone like that kind of investor, that we have several of them that are looking at that kind of strategy. So next steps, if this is of interest to you, you should go to our investor portal, which is at exponential-equity.com, and you'll look at the investor portal on the top right side that you can click on. You'll go through that, you'll see existing projects that are available for subscription. You'll see Aurora, Meadows, Townhomes as a subscription element, and you'll go through and look at the PPM and subscription agreement, go through the seamless e-signing process that we have, and use that. Once we have validated that your forms are filled correctly from a legal perspective, you have an accredited investor certificate given to us prior, or for this project, if you're investing with us for the first time, this is a 506C opportunity, C for Charlie. That means we can only accept accredited investors only on this. And once we have validated that, then we'll be using you can leverage the wire instructions available in the portal to fund your investment. Just to let you know, it's a small raise for us, so it'll be a first come first served basis. So if you are interested, please put down your commitment as soon as possible so you don't lose your spot. It'll allow you to secure your spot while you go through all the processes to ensure that we've completed the paperwork and go through the funding process in due time. In the meantime, thank you very much. If you have any questions, our contact numbers for myself, Yomash, and Brandon are here. You can email us, you can text us, and we love talking about this opportunity and any other that are coming for exponential equity. So we'd be happy to take your call and talk through the process. Thank you.